Transaction banking is one of the most mature and competitive businesses and financial services industry. And though it has taken some time, the transaction banking landscape is now rapidly evolving and getting disrupted with a wave of new innovation into customer experience, new product offerings, and technological advancements. Hi, I am Teboul. I head the Financial business for Infosys in North America. And today, I have the privilege of talking to Luke Teboul from Goldman Sachs. Luke is the managing director and the head of engineering for Goldman Sachs Transaction Banking. Luke, it's a pleasure to have you here today.
Thank you.
So Luke, let me start by the first question, which is pretty obvious and intriguing one for all of us. Goldman being the iconic organization it has been, it's been in business for almost 150 years. And for all that duration, Goldman did not try and get into transaction banking till the time 2020, that is when you decided to get into the business. Just help us understand what were the drivers or the proposition that you wanted to take to the market at that point in time, and why in 2020 and not before?
Sure. So when we talk about transaction banking, just so we're clear, we're talking about the products and services for large corporates to manage their cash. And we really saw a big opportunity. On the consumer side, there has been, in the last, say, call it 10 or 15 years, a lot of innovation, right? Fintech, neobanks, building new cloud-based platform, removing friction, and really pushing the boundaries on what can be done in terms of user experience. But on the corporate side, CFO and treasurer were still left with legacy platforms that were designed 20 or 25 years ago. And why is that? Because, at least personally, I think that's because the barrier of entry to be able to develop a transaction banking offering is much higher than in the consumer space. So you really need a player like Goldman with the expertise, the balance sheet, the risk, regulatory compliance framework of a seasoned global bank to then decide to invest on the technology to build a platform like TxB, and then really, on one hand, deliver the consumer-grade user experience that we've seen on the consumer side and that all corporates were waiting for. But on the other hand, still deliver everything around transaction banking that supports large corporates and their complexities, the number of entity and the number of country that the number of entities they have and the number of country that in which they operate in.
Look, again, the second question that comes to my mind is, as I mentioned initially, it's a very competitive landscape in transaction banking out there. And there are a small set of huge banking financial services players servicing the corporates across the globe. You being new, a Goldman transaction banking, new being the market, how do you differentiate your products and services compared to more established incumbent players out there in the industry today?
Yeah, I think that's a great question. We get that question quite often. The way I like to summarize it is I usually say it's the best of both worlds, right? It's the best of what a financial institution can offer with Goldman Sachs expertise, balance sheet, regulatory, risk compliance framework, and so on. The consumer-grade user experience of a neobank or fintech, and the security and the technology of a tech company. Right. So there's few things that really I think set us apart. One is that we are set up to allow our clients to really operate globally. So we want to make it easy if you're a client in the US to operate in Europe, and vice versa, we want to make it easy if you're a client in Europe to operate in the US. Most other transaction banks are set up regionally, and those things are very difficult. Another important point, I would say, is that we also want to ensure that our products are consistent in the way they are, in the way the user experience comes across globally. What I mean by that is, if you're in the US and want to make a FX payment in dollars, or if you're in Europe and you want to make a FX payment in euro, we want the user experience to be the same. And the last point I would insist on is that our product have really been designed from the ground up. What that means is that things like, for example, onboarding, right? When you give us all the documents, we can onboard a new entity and create an account in less than a day. Historically, it takes around 6 months to do, right? But another experience of the fact that we really took a fresh look at those products is our virtual account platform. Our virtual accounts are first-class citizens on the platform, and they can do anything that the physical account can do, but with the ability to be, created to be created much more easily and self-service. Meaning you can make payments, receipts, ACH, wire, positive pay, and all those things have been built in.
Sure. No, great. On the virtual accounts, now I know we have noticed that Goldman Transaction Banking has been great proponents of virtual account management and in-house banking solutions. Just share with us some of the ways in which your clients have leveraged these specific features and additions to your offerings.
Sure. So, the virtual accounts are a very important product for us. We invest a lot of time and effort to develop it. The problem that you have as a CFO or the treasurer is that physical accounts are rigid and inflexible. They're hard to open and they're hard to close, right? And so the idea was to really come up with a product that would allow CFO and treasurers to adapt their treasury flow as quickly as their business is evolving. So if you think about it, just to give you an example, if you enter, let's imagine that you enter in a new relationship with a supplier or a client that you don't trust yet. With those type of capabilities, in second, you can create a new bank account that you're going to use just for the lens of that relationship. You can share those details, again, just for the lens of that relationship, and then close that account when the relationship is finished. And that flexibility is, at least from what our clients are telling us, it's unheard of, right? And it really changes their day-to-day. So when it comes to the idea and the notion of in-house banking, the idea of in-house banking is not specific to virtual account, but it's just that it makes it so much more, so much easier to implement with virtual account. So the idea of in-house banking is, think about it that way. If you have a lot of entities and a lot of different currencies that you're transacting with those entities, if you set up your account without necessarily coming up with a sophisticated structure, what's going to happen is you're going to end up with one bank account per entity, per currency that you transact. So, for example, if you have 20 entities that need to transact in dollars, you'll need 20 bank accounts just right there, right? And so, as you scale as a company, it grows quite quickly by being the product of the number of entities you have and currencies that you manage, right? So the idea of in-house banking is, instead of doing that, then you create a simple structure where you're going to have one account by which you're going to do all your payment and your receipt in dollars, and then everyone else within the broader group is going to channel all their payment and receipts through that single bank account. But the problem with this approach is that historically it's been really hard to set up, right? Because what's happening is when you onboard new entity, you need to set up the corresponding bank account, and you need to set up the corresponding processes, either FX netting or notional pooling or sweep, to allow the in-house bank to function. And so with our virtual account platform, now you can set up an in-house bank, and you can onboard new entities, create the corresponding virtual account for them, set up, and all of that self-service, set up sweeps or notional pooling or FX netting capabilities, and all that completely, within seconds and in a self-service manner. And on top of it, things like entitlement, for example, who is able to make payment or approve payment can also be done in a self-service mode. So basically, now what to summarize, the idea here is now anybody can by themselves, onboard to TxB and set up their own in-house bank in a self-service way.
Oh, excellent. Now, again, clearly the level of complexity that you have kind of extracted away from your customers, it's tremendous. As you mentioned, both in the virtual account and in the in-house banking context. Another trend that we've seen recently come up is banking as a service in the industry. And the way I noticed is that pretty much aligned with when you were launching your offering, and Goldman Transaction Banking, I believe, has kind of pioneered that model of banking as a service. So help us with one, how do you see or you leverage that banking as a service offering from transaction banking at Goldman for yourself, and how have your customers kind of exploited the potential of this banking as a service model?
Yes, of course. So bank as a service, internally we talk a bit more about embedded finance, but the terms are synonymous. Embedded finance is a big focus for us, right? But just to set the context, really, when you think about transaction banking, we have two different go-to-market strategies. Right? We are first, we offer services and products to large corporates to manage their treasury. That's all the product that we just talked about. And then we have embedded finance, where we partner with either a technology company or vertical SaaS company, or anyone who wants to develop a financial product, to then co-develop a financial product and bring it to market without the need for those partners to become banks. And we saw, a huge evolution in this market. A lot of new players coming into this space. And what we saw, and internally we tend to refer to about this space, this part of embedded finance as embedded finance 1.0, are new players that would come in and help power things like a deposit product with a card, or simple payment method like wire or ACH. And that would be for typically a neobank use case, right? So think about it this way. Think about a use case where you create a neobank for, say, influencers, or a neobank for people with low income or low credit. The value add here is that you're bringing these financial products, this deposit plus payment product, within an ecosystem, right? So you're bringing it within this kind of influencer ecosystem. You're going to connect it with all these other tools. And that is the value of embedded finance. You can do that leveraging a platform without becoming a bank. And that's great. But again, it's a fairly standard product that you bring into a given ecosystem, and that's where the value is. Now, a lot of the reflection and the work that we're doing within transaction banking at Goldman is what we think about as embedded finance 2.0. And here the idea is, instead of bringing a standard product into a complex ecosystem, the idea is that you're going to bring your product, a bespoke product. And so the way we do this is we develop building blocks like payment, FX, deposit, and we make them configurable, so that each time we want to partner with someone to design a bespoke embedded finance product, we don't have to build a new platform. And we can just reuse the existing platform, but assemble it slightly differently to create a bespoke product. And so the idea here for us in the future of embedded finance, and again what we call embedded finance 2.0, is instead of building a standard product into an ecosystem, is to build your bespoke product into your ecosystem.
Excellent. So basically you're enabling customers to themselves customize the product themselves, and you provide them the tools to do it for their specific needs.
Exactly. That's why this is important, is because then the value and the fact that it's differentiated is in the financial product itself as opposed to the ecosystem.
Wonderful. Look, one of the rare happenings in industry is basically, obviously, creating a transaction banking ecosystem from scratch. I don't think it has happened very often. And you've been part of that journey at Goldman to get the whole transaction banking up and running. And that too, you built it out all on a cloud native infrastructure.
Right.
I'm sure there'll be a lot of strategic technology choices that would have come across or you would have made along the way. Can you share your experience and the kind of decisions and choices you had to make along the way as you were building a cutting edge platform that you have today with transaction banking?
Yes, of course. So, in building a global cash management platform on the cloud, it's something that's never been done before, right? And so we knew that it would be difficult, and we knew that there would be a lot of work to do that, right? So we started with a very clear build versus buy strategy, and it seems obvious, but it's really not, because enabling the cloud in a highly regulated environment is something that requires conscious effort. So our first focus really was on security. And then there's two areas that really where we spend a lot of time thinking about the architecture is anything around authorization and entitlement and anything around data architecture. Why? Because we knew that in those two spaces, once you've taken a decision, architectural decision, making changes are going to be extremely difficult. So in terms of security, we're using Okta, but we also developed an orchestration on top to allow us to bring some flexibility. And in terms of data architecture, we're using Kafka a lot for the data in motion. And then we've implemented the Lambda architecture. On one hand, we have our fast layer where we're using Flink and Java code to transform the data. And then the data is stored in Postgres, SQL. And on the other hand, we're using S3, Airflow, and Python code to transform the data. And then we're using Snowflake as our data warehouse. And for everything else, it really looks like a standard Java microservices architecture.
Excellent. And staying on the topic of cloud now, you've been up and running in cloud for more than a year now, year and a half too. What kind of value realization have you seen going with a cloud infrastructure, and what kind of value items you have unlocked along the way that you would have found difficult if you would not have taken the cloud direction?
I think there's really two aspects to this question, right? As a team developing a large-scale, highly critical transactional system on the cloud, we obviously focused on the product and the capabilities that our clients need. But we also focused on the fact that the platform is scalable, secure, and resilient. Now, simply put, ensuring that the platform is scalable, secure, and resilient is easier to do on the cloud than on-prem. It doesn't mean that it's free. There's still a lot of work and investment that goes into ensuring that the platform meets all those requirements, but it requires less effort for us to do so. And all this capacity that we free up is as much capacity that we can put toward building innovative products like virtual account or FX product as I mentioned before, as opposed to investing in really making the platform scalable, resilient, and secure. And the other aspect here is that by being on the cloud, on a native cloud, we get access to new technology and to tools that make our developer a lot more productive.
So look, how would you describe the success Goldman Sachs' transaction banking offerings have had in the market so far?
Mid-2021, we launched the offering in the UK, and then we are now actively working to launch the offering in Europe and in Japan in 2022. So clearly amazing success, amazing growth, and very good responses from the client and the market. But the thing that I would say just surprised me before anything else is that historically I've always heard that in the transaction banking space, clients would typically like to interact and send payment as files, and it was very difficult to roll out a technology advanced platform. But again, to my surprise, what we've seen is completely different. We've seen a number of clients really very eager to adopt APIs and to interact with us in the most technically advanced way possible. And that what we really seen is that clients were reluctant to do it because they didn't have good capabilities available to them. But the moment we rolled out those capabilities to them, the response was phenomenal.
Excellent, and congratulations.
Thank you.
Really tremendous numbers to talk about. So look, as you see a few years ahead, how do you see the transaction banking industry evolving, and what role do you see for Goldman's transaction banking platform as a participant in that evolution of the industry as a whole?
So I think that TxB has really set the bar for what a modern transaction banking platform should be. I think in my mind, there is really no doubt that corporates need offerings that are nimble and that are global as well. They need products like virtual accounts that allow them to adapt their flow and their setup in minutes rather than months, as it was before. Right? And I only know one way to achieve this is to build something like what TxB built. So I think that a cloud-based, modern transaction banking platform that is available across the globe is gonna become the standard. And I think similarly of what we've seen on the consumer side, once you use to this service, to this level of flexibility, I think there's no way back. Right? So in my view, there will be others which are going to follow in TxB footsteps. Now, I think it's going to take longer than what we've seen on the consumer side because the barrier of entry, as I mentioned before, on a corporate side is higher. You need the balance sheet, you need the risk control and regulatory framework. The technology alone is not enough, but you also need the technology. And so my prediction is that in the years to come, there will be others who are gonna follow the same path.
Excellent. And Luke, we at Infosys Finacle, we've been fortunate enough to have been with you from the early days of your journey at Goldman Transaction Banking. How would you describe the partnership with Infosys Finacle so far?
Yeah, so Finacle has been a TxB partner since the beginning of the adventure. We are extremely demanding with ourselves, and as a result, we are extremely demanding with our partners as well, and we know that, and I know you know that. And Finacle has been able to respond to that and really help us innovate and get to market faster. The Finacle team has really brought a lot of experience about transaction banking and B2B payment in general. But at the same time, we always look for partners who can bring this expertise but also have the capability and the technology to evolve on public cloud. And Finacle brought both, and really having that deep expertise and those technical capabilities have been a tremendous help for transaction banking up to this point.
Great. Thank you, Luke. And again, I can tell you that this has been a great experience for us to
Thank you.
have embarked on this journey with Goldman Transaction Banking. And thank you very much for your time today. I think the conversation was very insightful.
Thank you.
And we look forward to continuing partnership with Goldman Transaction Banking.
My pleasure.
Thank you.